Good evening, traders. It is Wednesday evening, August 14th, and it's time for my weekly video. This is going to be a relatively difficult one for me to do because this is intended for swing trading purposes, and this is a horrible swing trading environment, even a very difficult day trading environment because we have massive intraday swings. This is the SPY. You can see a breakdown below that technical support level, that trend line. We breach the 100-day moving average, test this low at 282, well above the 200-day moving average, and we bounce twice. That's a good sign. That's a sign that there are buyers at that 200-day moving average. We spike through and we spend a couple of days above the 100-day moving average. We fall back below it, then we rally back above it yesterday because of a tweet from Donald Trump that said that they are going to postpone the Chinese tariffs until December 15th. Well, we noticed a lot of selling yesterday, and the market could not get through this SPY 294 resistance level, and it was backing off and backing off this whole move yesterday. In fact, I'll put up a 15-minute chart. You can see that the market spiked up and then it spent the rest of the day compressing. That's not a good sign because that tells me that sellers are keeping a lid on the action. Yes, there are still buyers nibbling away, but after that initial surge, nada. Today, we give up all those gains on the open and we consistently drift lower the whole day. When you get really, really good news, and you would expect that a delay in the Chinese tariffs till December 15th, that would be received as very good news because the market's been really worried about how this might impact global economies. Well, overnight, right in here, we had news from China. Their retail sales dropped dramatically, and their industrial production dropped to levels that we haven't seen in about 17 years. China's growth is slowing. Make no mistake, China is the second largest economy in the world. It is the growth engine for the world. Yes, the US economy is doing well, but we are also showing some signs of weakness. ISM manufacturing, ISM services have been drifting lower the last 3 or 4 months. Q1 GDP came in at 2.1% versus over 3%. Excuse me, Q2 GDP came in at 2.1% versus over 3% in Q1. So we're starting to see some deteriorating economic conditions. Nothing to be overly concerned about domestically, but we also learned that Germany's Q2 GDP fell 0.1%. They are in negative territory. Another negative quarter would put Germany officially in recession territory. We're seeing bond yields spike. Let's put up the TLT real quick so you can see what bonds are doing. And we'll go out to a one-day chart, a daily chart. Look at that breakout. Look at that run. This is a flight to safety. And yes, people are speculating that the Fed is going to lower interest rates a couple more times this year, but this has more to do with people chasing yield wherever they can find it. We had 3 central banks lower interest rates, India, Thailand, and New Zealand in the last week. So the yield curve has flattened out in the US to the point that we haven't seen since 2007. That's a definite rotation out of equities and into bonds. There's a lot of scared money right now, and the economic conditions globally are weakening. You've got a possible Brexit train wreck coming up in October. You have the budget and the debt ceiling that need to be negotiated in October. We still don't know if the Fed's going to be lowering interest rates in September. I don't believe they will unless we get a big market decline, and we're seeing that right now. Stocks are trading at a forward PE of 17. They're up at the upper end of their valuation range. So, yes, there's plenty of room for profit taking. That's what we're seeing right now. Do I feel that the market is going to fall apart right now? I don't. I'm bearish. We have puts. We shorted the market up in here, so I've been calling for a market pullback. I'm not overly bearish, and the reason for that is that I don't see credit concerns yet. I'm watching Argentina, but I believe that we need many more months of slowing economic decline before we start to raise some credit issues. There are going to be some snags in the next few months, but if you take a look at a longer term chart, like a weekly chart or even a monthly chart, there's a monthly chart. This is a very powerful, very strong uptrend. Yes, we had a dip here. We recovered and we rallied, but there's nothing here that tells me we need to hit the panic button just yet. So, with that in mind, I know that many of you were probably expecting me to come out with a bunch of bearish put trades. I'm not going to do that. Actually, we've had a pretty nice pullback. We're below that 100-day moving average. I believe we're going to test this 200-day moving average. And we currently have puts on. You'll have to ignore this last bar. I just noticed it. I'm not sure why that's here, but it says August 15th. So this bar has not happened. This is a duplicate bar. But you can see how we are testing that close right here. And we are likely to come down to 282 perhaps tomorrow and then test the 200-day moving average. I think at this 200-day moving average for the very short term, we're going to have a little bit of a buying opportunity, and I'd be looking for a bounce off that 200-day moving average. Typically in the summer, the market gets nervous. You have the Fed and Congress in recess, and investors just don't like that backdrop. It's no one there to mind the shop, so all sorts of negative news items start to hit the wires, and it weighs on investor sentiment. So my take is that we've got a put trade on, and I'm just going to pop up the bulletin, and I'll bring it in to view. This is where you can find the link to the video that I'll be posting tonight, and this is also where you can find my pre-open market comments. I'm going to scroll down. Swing traders, I told you to buy puts near the open yesterday, but we had a massive 50-point S&P rally. Hopefully you didn't, but if you did, you're very happy today. But you had a chance to reload today and buy them at the same price within the first hour of trading, and that's what I told everyone to do. If you haven't bought the puts, here's what we're going to do. We're going to watch the first hour of trading. If we make a new low for the day after the first hour, take a short position and use a close above the 100-day moving average as your stop. So this black line, if we close above it, which is approximately SPY 290, we're going to stop out of our put trade. Well, fortunately, we've got some nice profits in it, so we're not going to let that happen. And the SPY 290 puts is what I had mentioned in my prior comments as my preference. And those went from about $8 after the first hour of trading to about $10.50 on the close. So if you bought puts, you should have some really nice profits in them today. Option implied volatilities are spiking. So here's how I would play this. We're likely to get a bounce tomorrow on the open after a big oversold condition like that. I'm going to back up just one bar here because that last bar is really bothering me. I'm going to try and move over one bar. There we go. We're probably going to get a bounce tomorrow morning. Not a big one, just a little one. And what will happen is that buyers are going to test the selling pressure and see what's up there. So we'll get a little bid, and when that bounce stalls, we'll start to see some more selling, and I would expect us to test this 282 level tomorrow. I'm also expecting by the end of the week maybe to test this 200-day moving average. We should get some pretty good bounces off of it. That is a major support level. I'm going to zoom out a little bit so you can get a longer term perspective. There you can see that 200-day moving average. For the most part, when we've touched it, it's been a good buying opportunity. So in the very short term, we're going to be looking for bullish trades that might set up, but I need to leave you with instructions on what to do with your current put position. So the mid section of this big red bar needs to be preserved. And I'm looking at this, we'll go out to a 15-minute chart and see if we can find any reasonable resistance level, and 287 strikes me right here. That's a pretty big retrace from today, and I'm not expecting to get above that. So we're going to use 287 on a closing basis as our stop for our put position. That's about an hour after trading right here. That's about our break even. We don't want to lose money on this trade. Here's another resistance level right here. That's at about the 286 level. So what I would do tomorrow is watch this 286 level. If the market trades above 286, I would take off half of the position. Lock in your profits, take half of it off. If the market rallies above 287 and closes above 287, exit the remaining trade. We will have made money. It's a good trade. It's only on for a day. So I'm expecting these resistance levels to hold, but I don't know what's going to be tweeted tomorrow. I have no clue. The market's all over the board. All I know is when I have profits, I take them. And I'm to the point to where I don't even swing trade much anymore. I am pretty much day trading because I have no idea what's going to happen overnight. Now, if the market is able to hold this 286 level and it starts to drift lower and lower, I'm going to suggest that you take half of your profits at 282. We'll zoom out again. That's where the market found support here and here. At 282 level, or anything close to it, let's call it 282.20, just a little bit above that support level, take profits. Okay, we'll leave the remaining half on, and our target will be the 200-day moving average for that. If we make it through the day tomorrow and we take profits on half of the position and we still have the other half, I suggest lowering your stop, and I would lower your stop to the 286 level on an intraday basis. So we have a put position on. We've got something to keep us busy with. Well, what if I didn't buy puts today? If you didn't buy puts today, the train has left the station. Okay, I would not go chasing puts down here near a major support level. So let's see if we can find some stocks that are really holding up well that might be of interest to us if we bounce off of these levels. Okay, so I will outline when and only when we would take these long positions in these stocks. But let's take a look and see if we can find some. I'm going to put up custom search. And I'm going to be looking for decent option liquidity. So we'll go with 3. And then I'm going to be looking for a stock that is strong relative to the SPY. And I'm going to get a boatload of candidates. My first inclination is to look for a stock that is above the prior day high. I don't think I'm going to find many. There are a few. Nothing of particular interest as I just glanced through the list. So that's going to be too restrictive. We need something that's a little bit easier. How about a stock that's above the 20-day moving average or even the 50-day? We'll start with the 50-day. Excuse me. Not bad. Still a pretty lengthy list for us to knock through. But I think I can do it. And maybe we can go, this is not a bad list. I see quite a few stocks in here. I'm going to ratchet up the uh, option liquidity value. And let's see how many we can get rid of by doing that. I think we've got enough. So let's take a look at what we've got. These are going to be stocks that I think you should keep an eye on, stocks that might perform well. Oh gosh, I haven't even gone through my stocks from last week. I guess that's how I'll conclude my video, is by going through our bullish picks from last week. So let's just take a look. We're going to click through these. Not interested in this. It would have to be above that 100-day moving average. It's compressing, probably takeover. Apple had a huge surge yesterday, and it was able to hold on to the gains even after a bloodbath today. We've got the 100-day moving average right down below it here. I think that's actually a pretty decent support level for us to lean on if we took a position in Apple. So I would watch for the stock to maintain that support right there. AGN drifting lower, takeover, no interest. This is nice. Stock is able to maintain this support right here, but it's a little bit away from that 100-day moving average, so we'd have to have a pretty wide stop. Amgen, nice breakout here. Pretty hard pullback in here. I would love to buy that stock right in here at that horizontal breakout. So how do I do that? Well, I put a GTC alert up. I'll use that, and I'll use that, close. I'll put a GTC alert up, and if the stock pulls back to that level, I'm going to know about it. If I've got market support, and it happens, I'll have an excellent trade candidate, a stock that is broken out and probably is going to continue higher. Let me overlay the S&P 500 for you right now, the SPY, and just click SPY. You can see market down, stock up. Okay, we like that. That's relative strength. That's what we're looking for. So I like that. I like Amgen. I'm going to put that on the list. It looks good. I'd like to buy a pullback, but I've got an alert for it in case it does that. Let's keep going through the list. I'm just clicking and looking. This is nice. Look at that breakout after earnings. This is Carvana, and it's holding very, very steadily. So that's the breakout. I want to know if the stock comes back to it, but I believe this stock is going to continue to grind higher. So I'm going to put that on the list. Not too interesting, but holding up well. Holding up well. Choppy, no momentum. Compressing. Gold is making a really nice run. I've never been a gold bug. I guess you could make an argument for being long gold, but it's starting to get some long tails in here, which tells me that it's pretty volatile, and there's tails above the body, which means that there's some supply up here. There's some sellers up here. I'm not crazy about it. Google, not bad. Market down big. Now here you'll see market down, makes a low, bounces, market tests that low. Let's take this off so that we can take a look at Google. Google actually pulls back, moves higher, and makes a higher low than the market did. See that? Market's on its low from previous. Google's higher, and Google's above that 100-day moving average. I like it. So Google would be one that I would also consider. Just going through the list. Nice earnings reaction above the 100-day moving average. Some resistance up here. Pretty choppy stock. Not that interested. Just so you know, these are just the stocks. I'm just clicking through this same list right here. Coca-Cola, nice breakout on earnings. You can see a wedge forming here. This would be a good buy on that wedge breakout, and you would use this horizontal resistance level as your stop. So Coca-Cola looks pretty decent. I'm not going to add it to the list though. Not interested. Not interested. McDonald's, not bad, but it's getting some play right now because a lot of the consumer discretionary stocks are strong, and you see money going in. It's a flight to safety on a lot of these names. And that's why some of them are up. That's Micron. Still looking. I like Roku. Earnings. Powers through. Pulls back with the market a little bit. Let's put that SPY overlay up. Look at that. Market's selling off. Stock up. We've been long Roku for a while. You've seen it in my other videos. We caught it way the heck back here. It's been a really nice one. It's had some recent upgrades as well, so it's a hot stock, no question about it. Starbucks, nice, breakout. Powers higher, pulls back with the market, higher low. Market making a low and checking that previous low, low, checking the low, low, higher low. Nice, this stock wants to go higher. Starbucks is another one. Also, I guess it helps that it's not very exposed to a trade deal with China. Keep looking here. Don't care for that. Silver. Choppy. Twitter. Twitter makes a nice gap on earnings, and it's able to hold this level right here. I like that. It's got really good support. I think Twitter's worth putting on the list. Only got a few more. Texas Instruments. Nice breakout after earnings. Comes back, fills in the gap, higher, low. Relative strength. These are the stocks that we want to buy. Not overly excited about this. Market pulls back here, stock bounces with the market, pulls back here, still looks like it could fill in the gap. But that's okay. We've got enough candidates already to look at. And now I'm going to take this off and I'm going to build a list. I'm going to go in, click create, and I'm going to click on, or name it August 14th. And then I'm going to start typing in our symbols: Amgen, Carvana, Google, Roku, Starbucks, Twitter, and Texas Instruments. Save and close. So let's take a look at each one of our candidates and let's recap what we're looking at for the S&P 500. So the S&P 500, we've got a chance to scoop some stocks. I still believe that the market has downside. So Pete, if the S&P gaps up and rallies above the 100-day moving average, should we be buying the stocks that you show me tonight? No, I wouldn't do that. The reason I wouldn't do that is because I don't think we move higher until we move lower. We need to come down and we need to establish a nice support level. If we are able to get down to this 282 level and bounce, and more importantly, if we're able to get down to that 200-day moving average and hold, don't want any closes below the 200-day moving average, then I think we've got a good chance to scoop some of these stocks. We want to make sure that they maintain their relative strength. So I'm going to click on Amgen. Okay, that is our level that we're hoping to buy at. If the S&P 500 tests 282, we might get a chance to do that here, or the 200-day moving average. I'm going to also click on 10SI because this is our relative strength gauge. And what we want to do is when we have that test at 282 or at the 200-day moving average, we want to buy stocks where the orange line is still above 0. Okay? That means we still have that relative strength that we're looking for. So in this particular case, we want that support level right there is where we would ideally like to buy. CVNA, it doesn't look like it's going to pull back much, but that's where we would want to buy that stock. Make sure that we still have this relative strength. Where is your stop? If we're buying stocks on a pullback like that, we want to make sure that the SPY does not close below the 200-day moving average. If it does, we need to exit any stock plays that we're in. So first and foremost, we want to exit if the SPY is down below the 200-day moving average. Now keep in mind that's also our primary target for our SPY puts if we get there. So we will have a short position on, and if you were nibbling on some stocks, you've got some nice profits in your puts that'll hedge the position. Google, we want to try and scoop it right around this 100-day moving average, and you can see how this orange line is just starting to dip down to that 0 level. We want to see it above it. So if Google holds this 100-day moving average while the market sells off to test that 200-day moving average, this orange line will stay above it and maybe move a little bit higher. Because Google will have shown that it's strong relative to the market. Roku, I would like it to come back and get to this support level right here, which is the open, and that's about 119, let's call it. Boy, I think that'd be a great entry point. This stock is going to be a buy. It's got a lot of volume. It's got a lot of interest. I don't think it gets all the way back to filling in this gap, but man, if you ever get a chance to buy it at this gap, you definitely want to. If that gap fails and you start to close below it, then we need to get out of our long stock position. And that would be true for any of the stocks that I'm showing you. The game plan is very easy to devise. We're finding strength. We're looking for these breakouts. We're using that breakout support level as our exit strategy if the stock goes haywire. If we get a nice market bounce, these stocks will all be off to the races. Starbucks. Would like to buy it right here on this low. Don't know that we'll get a chance to, but if it's able to hold this gap in here with the market pulling back, it's going to move higher. It wants to go. You can see the nice relative strength right here. Twitter, same deal. It's right on that horizontal support level. We want that open to hold. So market, everything falls apart. Stock right here, that orange line is going to stay up here. It'd be a good entry point. Texan, Texas Instruments, right in there. You can see that lines up and drop a line right in there. I think this one has a chance to pull back pretty easily because it's a choppy stock. So those are our bullish picks. This horizontal breakout needs to hold. We need to see that relative strength above 0. We want to make sure that that's maintained. And we want to try and test this 82 level on the SPY. I think we're going to test it in the next day or two. and we might even get down to the 200-day moving average. We had about an 85-point sell-off today. I mean, folks, it seems unrealistic that we're going to come down and test the 200-day moving average. It's so far away. No, it's not. It's half of today's range away from testing it. So very, very possible on an intraday basis that we test that 200-day moving average. Now, if we test it tomorrow and the market closes on its low of the day, there's no reason to stick your head in the noose. Let things play out for a couple of days. Make sure that that 200-day moving average holds. When the market goes back above the 200-day moving average and it looks like the dust is starting to settle and everybody's calming down, look at these stocks, and if they've still got their relative strength, these are what you want to buy for a market bounce. That market bounce might last 1 or 2 days, could last 3 or 4 days, but you got to take profits on the bounce. So as you start making money and the market goes higher, start scaling out, take some of those profits, because you don't know what is going to happen day to day. So when you have money in the market and you've made it, take your profits and be happy with it. Don't look back. There's going to be another opportunity when prices are all over the board. That's the one thing I can guarantee you, is prices are everywhere. And that is what you needed to do last week. So I'm going to put up my video from my picks from last week, and we'll look at each one of these. So last week we had this big market drop right here, and we bounced, and then I posted the video right here, and they were all long positions. We had a nice big market move the next day, and all these positions benefited. So we have to count 5 days back. 1, 2, 3, 4, 5. You can see that's where you could have gotten in. Nice little profit potential. Stock held up very, very well relative to the market. I think ENPH is another stock that you can buy on any kind of market dip. You can see the relative strength here. This is a nice one. You're able to make money in that. Flex, 1, 2, 3, 4, 5. Had a nice pop up that Thursday and then pulled back. So this one, that's a loser. You had to get out here. It gave up that bar, and now we're below the 100-day moving average. I wouldn't short it. I just wouldn't want to be long, but call a spade, that's a loser. 1, 2, 3, 4, 5. That's what happened with Coke that Thursday last week. Really nice upside. Good profits in that trade. But you had to be out. You had to take profits. It's going to be the same way, playing the bullish side of these swing trades that I'm showing you tonight, just like it's going to be the case for the puts that we have on. Do not let that turn into a loser. Don't let it happen. This market's moving very quickly. You have profits, take them, be happy with them. Maybe don't take the whole thing off, take half of it off. It'll make the other half much easier to manage. McDonald's, 1, 2, 3, 4, 5. Really nice price action for 2 days. Take profits. QSR, all over the board. Opened here Thursday near the close and just sold off the whole day. This would be a losing position, and I'm not sure the conditions that I had for this. It'd be unusual for me to buy this kind of volatility unless I could get it right here on the breakout. So I'm pretty sure that would have been my condition, is wait to see if you can grab it here and then use that as your stop. So if you bought it right here, you lost money. If you waited here, well, the next day it gapped below it, you would not have bought below your stop. So shop, really good. 1, 2, 3, 4, 5. Big surges up. Very big trade. Twitter we've looked at. That held its own. Right in there. but eventually it slipped because the market's pulling back. Texas Instruments liked it last week, still like it. So same thing here. That was the price action Thursday. You had to take some profits. That's it for this week. Just tread very, very carefully. We've got just a incredibly dangerous market right now. It's all over the board. I don't know what it's going to do day to day. Nobody does. My guess is we're going to sell off, hit the 200-day moving average. You should be scaling out of your put positions, take profits on them, and then start looking at the flip side. Start looking at some of these stocks that you can buy that are really, really strong, because if we get any kind of 1 or 2 or 3 day bounce, Roku, Google, Texas Instruments, all the stocks I showed you, they're going to be strong relative to the market and they're going to take off. Thanks so much for watching. I'll see you next week.